Shout out Joseph Wang, goes by Fed Guy 12 on X or Twitter. He is out with a wonderful post this morning that I have summarized and I think bears some focus, some understanding. Let me go through it and then we can riff on it together. I think it is important and might paint the picture of what's coming for the next several weeks. So again, full credit, 100% credit for Joseph Wang for this. Basically starts off with the fact that the administration, aka Trump, is very clear. They want $1 trillion in new revenue. Okay, again, remember we had those conversations with Howard Lutnick and Scott Bassett talking about $1 trillion in savings and $1 trillion in net new revenue. Again, back to Joseph Wang. Joseph Wang highlights that these golden visas and closing tax loopholes will raise money, but it will be modest. I don't know what modest means, but for this conversation, let's call it 100 billion. God, it's really hard to call 100 billion modest, but the story is the same. If golden visas and closing tax loopholes are successful in raising 100 billion, that leaves 900 billion for tariffs. This is what Joseph Wang is highlighting. If tariffs are going to do the heavy lifting of raising $1 trillion, the market, the stock market, the bond market, frankly, the crypto market, don't understand the magnitude of what is coming. Basically, they are not set up properly for the risk profile, the heavy-handed nature of tariffs. So if I was sitting at home and watching this, and I heard Joseph Wang's, frankly, well thought out thesis, I would ask myself, okay, great. If we take the administration at their word that they quote unquote want to balance the budget, let's just assume for a minute that Doge does its thing and it gets its trillion. If we can assume that golden visas and tax loopholes do 100 billion, shoot, let's hope it does 250 billion. You're left with, as Joseph Wang correctly highlights, 750 billion new revenue in tariffs. And then ask yourself what happens. I don't know about you folks, but that stagflation call that we've been talking about for a year or so is starting to look better and better and better. We really could be in this environment. To that end, Goldman Sachs out stirring the pot this morning. Read a couple of articles. First, let's say that Goldman Sachs has raised their recession odds from 20% to 35%. That is actually not the most market moving thing they did. They also raised their inflation target from 3% to 3.5%. I don't know about you folks, but if PCE core is 3.5%, can the Fed cut rates? I mean, seriously, can they? I don't know. They also say that GDP is going to be weak, below average, calling GDP for 2025 1%. More on that, more on Q1 GDP in a minute. And they're highlighting that unemployment is going to rise from 4.1 to 4.5. Again, if we take Goldman Sachs and this call, wouldn't you have to look at that as stagflation? 1% growth, higher unemployment, higher inflation. Feels kind of stagflation to me. And again, the stagflation environment is the boogeyman for the Fed. I would ask you guys to go get the 54-year spreadsheet off my website, onerentalatatime.com. If you haven't, it is free. All you need is your email. Because you can go back and look at 78, 79, 80, 81, 82. You can look at what happened when Arthur Burns cut rates too soon. You can look at what happened when Paul Volcker took rates too high. You can look at stocks, housing, inflation, unemployment. It's all there in the spreadsheet. We have been here before. We have seen a version of this before. And if you are investing and not looking at history, you are making an arrogant and uninformed decision. I am not here to tell you that 2025 will be like 1982. That's not what I'm saying. I'm saying there's similarities, and we have to be aware. Because if you understand what might be coming in a stagflation environment, you have an advantage. You can make moves. You can make moves when everybody is scared. That's what I hope you do. It was very interesting to watch the 10-year note. I don't know what it's at now, but pre-market, it was at 4.2. So expect mortgage rates to fall. We also have Rocket Mortgage. I don't know if you guys are seeing this. Rocket Mortgage is now buying Mr. Cooper. So they bought Redfin on the front end, and now they're buying Mr. Cooper on the back end. Let's not pretend that Rocket Mortgage is not going to own the entire life cycle of housing, from interest to mortgage to servicing. Now, once these close and they do all their integrations and yada, 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 does this give Rocket Mortgage the ability to create some exciting new opportunities? We're going to find out, as one of my Twitter followers said, if vertical integration works in mortgage. Once these transactions close, and should they close, Rocket Mortgage is going to own the entire life cycle. That's interesting, and to see what they do with that. Patrick Bet David got caught. Patrick Bet David, unfortunately, and I don't think it was on purpose. I don't think it was malicious, but nonetheless, he put out a tweet yesterday saying that 6.1 million Americans are behind on their mortgage, and then threw up a multifamily chart. This is a classic doomer ploy. How many doomers have taken a multifamily chart, which looks bad, and it is bad. We've been telling you that for 2 years now, but then go on to say that single family is in trouble? Well, single family FHA certainly has some issues, but if you step back and exclude FHA, delinquencies are not concerning. I have some numbers here. Let's see if I can find them. National delinquencies are up 5 basis points, so 0.05 to 3.53% in February. 90% of the rise was in FHA, which accounted for 131,000 year-on-year growth. FHA clearly has some issues. There is clearly some fraud and, frankly, some stupid decisions going on to take delinquencies and stick them on the end of the loans and delaying foreclosures. There's some rot inside some FHA loans, which has to get cleared up, no doubt. I do not think it will be large enough to be catastrophic for the nation. If there are concentration, you could really have a problem in certain cities, no doubt. I do want to remind you again, go get the spreadsheet, 54-year spreadsheet. It is free, because if we are truly headed to a stagflation environment, you need to know what happened during Arthur Burns' tenure at the Fed. You need to understand what Paul Volcker did. And then you have to ask yourself, is Jerome Powell Arthur Burns, or is Jerome Powell Paul Volcker? You also need to realize that I believe Jerome Powell's term as Fed chair ends next year. I think it's March or April, might be May, sometime in the first half of next year. So he's got roughly a year left as the chair. I don't think there's any chance he is renominated by President Trump. But yeah, that is something we should be doing. Goldman Sachs again says the risk of April 2nd tariffs is greater than many market participants have previously assumed. I think that goes along with what Joseph Wang correctly highlighted this morning. What else do we got? Barclays, Trump may issue up to 25 reciprocal tariffs on 25 countries. Wednesday is going to be bananas. So here's just off the cuff, total right turn. Does anybody really think Wednesday is going to bring perfect clarity? I mean, really? With the way Trump runs and communicates, does anybody think that the uncertainty of tariffs just magically lifts on Wednesday? Remember what one Fed president said, that we're sitting in some thick fog on the side of the road with our hazards on. It's just too dangerous to do anything. Does anybody think it gets better Wednesday? Does anybody think it gets better Thursday? I don't know. I don't have any warm and fuzzies. Bank of America economist, job report on Friday will highlight if we're in a recession or if stagflation might be a problem. It's going to be interesting to see what the jobs number is on Friday. Fortune magazine, companies slashing earnings forecast as consumer confidence falls to a 12-year low. Don't know if you guys have checked GDP now, but it is showing a negative number. It actually will be updated today. Today will be an update, but I haven't seen it. Negative 5%, and they have core PCE at 3.8. Q1 could be negative. You know what? Let's have this. Let's have over under of Q1. Who thinks Q1 will be a positive GDP? Leave comments below. Positive or negative? Do you think Q1 will be positive or negative? It's actually a really tough call. And one of the reasons it's a tough call because I have heard about people buying cars and wine and other things ahead of tariffs. So in reality, the last week, maybe the last 2 weeks of Q1 could be a pop. We could absolutely have what's called a pull forward in demand that artificially makes Q1 look better. It really could. I mean, I've had many people tell me their businesses are buying capital goods in Q1 pre-tariffs. If enough businesses and if enough consumers actually pull the trigger on major acquisitions, Q1 might look okay. So it's a difficult call whether Q1 will be positive or negative. So let me know in the comments below. It will be interesting to see what people say. According to Resi Club, which is a firm I trust, Lance Lambert, Resi Club Analytics, home builder finished inventory has hit a 15-year high. For context, in February, the last month we have, 2025, there were 119,000 completed and ready to go units. Way back in July of 2009, 126,000 finished goods. So again, a big jump. We do have, again, remember folks, I'm going live in school on this Sunday. If you want to talk to me, you want to ask me questions, I will be in school Sunday morning, 8 a.m. I haven't put it on the calendar yet, but I will. And I look forward to adding more and more value to school. I would really, honestly, love to see the school community get up to 400. We seem to be stuck around 360. I believe most of that is because I have been out of pocket for a month. I did an event and then spent 3 weeks in Asia, so it's my fault. Lots of you want to ask me questions. So again, the best way to do that is in school. $20 a month, 67 measly pennies a day. I will be live 8 a.m. Pacific. I will add the Zoom to the calendar shortly. We did have an accountability group. Shout out Jared yesterday talking about investing in multiple markets, contractors, HELOCs, LLCs, and much, much more. So again, there are 6 different accountability groups you could join. Find the one that fits your schedule. Apollo Group chief economist Torsten Slok. I actually got to try to interview him. Torsten Slok. He warns that Doge and the trade war could put a downward pressure on national housing. I need to ask him about that. I'm not sure where he's going with that, but we've got to ask that. And here's the last thing I talked about. Back to the earlier question. Is Q1 going to be negative or positive? I will let you know about the CNBC survey. CNBC survey of economists says that GDP growth in Q1 will be 0.3%. So they are, according to the CNBC economists, they are taking positive. They're saying as tariffs stoke stagflation conditions, core PCE is stuck at 2.9%, and real activity is down. Folks, I warned you. 6 months of chaos. At this point, I hope for only 6 months of chaos. We need some clarity. Will Wednesday bring it? Will Thursday bring it? We shall see. But let's close on a positive note. We are mainly investors on this channel. Guess what happens when there's no clarity? Guess what happens when there's uncertainty? Two things. One, demand disappears. You have less competition. Two, people get desperate. So write disrespectful offers. Write disrespectful offers to builders. Lance Lambert just told you there's never been more finished inventory since, what was it, July of 2009. Write disrespectful offers on new builds. In chaos, with demand collapsing and motivated sellers rising, it is your job and your job alone to find and create great deals. This is our time. This is our time. Investors are the people that will help clear the market. Do not pay list price. Get seller credits. Get rate buy downs. Make great deals. All right, folks, take care. Have an amazing day. Like, subscribe, comment. And again, remember, Q1, will it be negative or positive? I look forward to your comments. Later.